And welcome to another episode of Stock Talk Product Review. I am your host, Mike, and with me I have Kage, and the other ones, well, they're sleeping in or playing slot machines or getting wasted. I don't know, something like that, huh, Kage?
Well, they better be quick, and if they want to get in on this action, because it can pass you by like that.
Yeah, it can, especially, but hopefully they're not getting too much cheap booze and too many, slot machines and money blown. We've got some bad times ahead as far as with the economy that we talk about. That's all we talk about mostly as economic news and things like that. We got an article on zero hedge, the straw that breaks the market's back. The Fed must do 3.9 trillion in the quarter to control inflation, which it possibly can't do. We've warned about this before, guys, on the show, that bad things were coming and possibly Congress is going to have to come back to do with some of them. They're going to have to jump off the campaign trails and come back to try to fix some of the recipe of disaster, because October is coming and winter is coming. And with that is that fourth quarter looming, and things are about to get tight and ugly. You have this situation, and then you also have, Kage, I'm going on. This is off the Twitter machine, not like a conservative type of thing, but it's Fortune magazine. It says the U.S. enters its first housing downturn since the post-Great Financial Crisis era, and the recovery won't come until 2024, predicts Goldman Sachs. That I'm not taking anything from Goldman Sachs as far as 2024 is going to be the recovery. I mean, that's when you're going to see.
It's probably going to be more like a good 6 years before then.
If that was the case, hey. If they say that's going to happen, I would be way happy. I would be sitting here. I'm not counting my chickens before they're hatched. I'm not trusting that. I would love to believe it. I love their optimism that they have. You know, that would be so awesome. But I just don't.
But you want to stay real. You want to stay. Yeah. You want to be more realistic.
How many more times do people just keep on having to go to the well to believe the cooler carriers in the alphabet media? I mean, honestly, I just don't understand how people just keep on. Now, it is true that they have a lower rating than Congress, but they just keep on throwing out these numbers and things like that. And then you got these people that are these companies that are connected in government, and they're just throwing out these pom-pom numbers and things like that. And it's not a good thing, because it's taking people off the mind, and we're seeing in this population more people still not figuring this out, and they just keep on racking up debt and taking out debt and not realizing that the crap is about to hit the fan.
I think it's more along the lines of people are too busy with their lives to really look at all the big picture, I guess. I mean, they've got already enough on their plate, which I can understand and sympathize with. But in order for them to actually have a future, and for their children to have a future, they need to take some time to really sit back, look around, take inventory. And if they don't do that, then I weep for the species. I weep for our children and their children.
Yeah, it's not a good thing that's going down right now, and everybody's got to wake up and sniff some coffee or something like that, or the smelling salts. Tyler Durden has he posted on Twitter, remember, every Fed tightening cycle ends in disaster, and that means much more of Fed easing. If you go up to his charts here, he's got the 27 crash and 33, and you can see all of a sudden in 45 the resistance comes up from World War II, and then you got yourself going into the 60s, and then 70 the downturn in the 70s with the Carter years, and then popping up there again. You have the debt there in 81, and then going back with the stock market crashes 87 and your downturns. And so you're seeing resistance here again from the price target in 2019 is what he talks about. He says there's little disagreement that the Fed's end game is the big question on how we'll get there exactly, in the leading over-tightening and the crashing of the economy sparks a policy panic and another big overreaction with the opposite direction. Do you think, Kage, that you are going to see a Paul Volcker moment where the chairman goes into Biden's office and says, dude, he could go in there in 2024 and be like, or sorry, 2023 and be like, we've got to do some more, raise more rates and things. We got to take control because this thing's getting out of control. Wouldn't you say there?
I think the current puppet in office is too easily swayed by one opinion or over the other. And to be honest, I don't think he'll want to hear it. I don't think he'll budge. And then all gonna get slammed anyway, and he's gonna take the blame for it.
Yep. When that's the thing is there's two scenarios in America. What happened with one is in the 70s when Volcker goes into Jimmy Carter's office and he's like, dude, I gotta raise the game here because this thing's gonna go out and I have to do this for the country. And he stood for what he had to do for the country. Otherwise, it was going to be the end game, and basically that was the end of the Carter administration because of that. And it had to be done to save the country to get everything raised like that. Same thing happened with Bush, basically when 08 was happening, 07, 08 was happening, and they basically said we need this amount of money, or things are going to go to the tank mode. They had the choice. Was it the right choice for a bailout? Probably not. I think he did it for political reasons, trying to help McCain, but there was no helping McCain because things were already bad at that time. But you have those scenarios playing out there. There's little disagreement with the Fed's end game. The big question is, how do you get to exactly to lead the over-tightening that crashes the economy and sparks policy panic and brings another Fed overreaction for the opposite direction? For the next 6 months, Wall Street was confident that the Fed's rate hikes, which were March 00, would have since crept up from 2.25 to 2.50 and expected for another 1% and 125, and the Fed eases back on brakes. But, Kage, we still have people taking out loans and crap, $1,000 payments and things like that and buying these expensive cars, and they're living in apartments and things like that. They just don't get it. What say you?
The only thing I can say to the majority of people is live well within your means. Don't take out more than you can afford, and don't write checks your tush can't cash.
America's chickens are coming home to roost, unfortunately. So the days of the cheap credit and all that, it's all over. So incidentally, one reason that Wall Street professionals expect the Fed to pivot dovishly sooner than rather later is that they expected the Fed would so aggressively seek to trigger the next recession and keep hiking until we're further than that there. It's just everybody keeps on. You remember the phony war in World War II? This is a phony economic time right now. This is a phony time when nobody knows what's going on. Everybody's digging social media. They're not paying attention. They're paying attention to this person and that person. SocGen Quant Solomon's consensus view said in 2018 pinpoint a peak of Fed funds lowly at 2.5%, and it turned out to be on the spot and calculated the Fed funds rate won't be able to climb above 1% before the Fed over-tightens the restrictive territories. Over the course of 4 months and 1.5% proposed 1% red line, Solomon's math was clearly wrong, and he was wrong that the SocGen quantitative underestimated the far gross weight of the Fed's balance sheet in QE on over-easing and tightening of financial conditions. And I know, and they have these charts that they have presented, and the people over at MSN and things like that are going to be like, yeah, things are okay. This is the greatest economy you've ever seen. Meanwhile, you have on here on Fortune, which they're predicting an 8.9% housing GDP drop this year and 9% by 2023. It looks like with this crisis, I don't think they have the mounting foreclosures and everything like that that are going to be coming down the pike. What say you to all this with the inflation and the upcoming housing crisis that's coming?
Well, ever since the Fed has been around, they've been in charge of raising and lowering the rates, which are basically an indicator of how well economies do. And when a economy is not backed by hard resources to keep governments and banks and people honest, this is what you get.
Yeah, and I'm also agreeing with Chairman Powell right here. His policies cannot address the supply side challenges on this. I mean, he can't address all this because you got a lot of stuff happening in China right now, and no one's even seen things coming yet. We've heard about Halloween candy shortages, all those Christmas presents that you are going to order this December. They're going to be overinflated because China's going to have higher cost of operating with their droughts and things like that, like I discussed before. And all those inflated goods are going to be dumped on there with the supply chains. That's what Powell's trying to refer to. So he's giving the regime and everybody a warning, saying, "Hey, look, this stuff's beyond my control right here." You know. So
and we're starving ourselves of energy trying to go this green route, and obviously China is not interested in going green, and so why should they get to dictate what we do or what we buy or what they want to put on us?
And it looks like it says the important caveat of the analysis is the presumption that the current inflation levels resemble the late 70s through 80s. The inflation points to the highest in 40 years and might be a reasonable assumption. Possibly could be higher there, Kagi. We could not be getting all the numbers there. It possibly could be higher there. That's why we've been saying watch your pennies on this show all the time for the past like 2 years since this show's been going. So we're just going to have to see how this plays out. It's a developing situation. You can go and read Tyler Durden's article. We're going to go into some stocks here right now. But yeah, this is a developing situation. We're going to have to watch to see how it goes and things like that. I'm going to jump on to Market Watch here, and we're going to bring up the first stock, and I'll have you bring up the comment boards, and we'll see what we got cooking here. Looks like the first stock is ALLK. So I'm going to bring that up here.
What do you want to say about ALLK? You want to go over the chart first, or do you want to go right into the comments?
We can go over to the chart here real quick. I'm going to bring it up real fast. So this one is a top trending stock, and it actually was pretty decent as far as a gain today. It was up pretty far. Then it looks like after hours we kind of had the falling out, which is expected there. It is not close to anywhere where it was in 2021, but ALLK Incorporated last tick was $4.81. Going into what would you say they do here? Looks like going on. Let's go down below. Sorry, my system's a little slow there with the finger. Engaged in development of therapeutic antibodies. Its primary product is AK002, a monoclonal antibody used for treatment of various eosinophil and cell-related diseases such as eosinophilic gastritis, urticaria, several allergic conjunctivitis, and indolent systematic mastitis. And the company was founded by Christopher Bevington and Bruce Bochner, and it's headquartered in San Carlos, California. Going on to stock twits, Kagi, because that's where the real traders are at. Kagi, what do you got on the twits?
How about this take from a Grim the Fallen, AALK bullish, and he's got a clip, a picture, and it says, "When gambling, you can win 2,000% of your money, but you can only lose 100%. Do the math."
Yeah. And what else do you got?
How about this one from Insider Finance? They're Plus members on StockTwits. Momentum activity, AALK, is the number 7 ticker with momentum activity traded by institutions with options transaction volume of 5.2 times the average daily volume, a leading indicator of market movement. And he's got his little chart in the comments.
So this isn't a prediction. This isn't say go out and do this or anything like that. These type of stocks is what I would say to protect yourself going forward as we go into the perilous times of pissy economicness, if we want to call it there. It's just something I threw out. But a lot of these stocks right here, they have pipelines. And if you follow the pipelines and the news, what you're going to get is you're going to be able to ride those news waves. We've discussed this before. So you got to watch as far as who's running the company and things like that. But as they go through those waves in those charts, you could come into some luck down the road, years from now, months from now, just depending on the news and what breakthroughs they go to. Going forward with the perilous economic times, this is one of those stocks where it's definitely got to be on your watch list, and you got to check it out and see if there's a place that you can find a place to look at it there. So Motley Fool has an article about it because it's popping in the news. It says shares of the beaten down biotech ALLK are showing signs of life today. Specifically, the clinical stage of immunodulatory receptor specialist stock was up by a healthy 24.7% on a heavy volume at 1:15 Eastern Wednesday. What's powering the biotech stock higher? Interesting, Alaskos hasn't released any material news since 2022 second quarter earnings a full month ago. Investors, in turn, seem simply of getting ahead in the position to key upcoming catalysts due out next month. So there is something coming up. So you never know. You could ride that way. You could ride that news wave too as well. What else do you have on the twits?
How about this from Raticles? He says, ALLK, I am 100% convinced someone knows something. It traded 23 million shares in the first 60 minutes to the $6.31 high. News to the little guy can be spread that fast to get the volume like that. Then the buyer sat back and took in the massive selling that followed. 5 million shares to take from the $6.31 to $4.60 range. Then traded $4.75 to $5.25 rest of the day. Somebody had to own this today. Today's volume was so bizarre and outside the ordinary.
Yeah, it's a weird take, and I wonder if they made some coin there. They made some coin there, and I think they're coming back for the next party the next month maybe. After all, ALLK stock has a prime short seller target over the biotech's late monoclonal antibody Lirenmab missed the goalpost as treatment for esophageal gastrointestinal disease late last year, which in turn the catalyst might be picking investors' interest today. Alaskos is slated to announce the top-line results of Limab's late-stage trial for esophageal duodenitis by the next month. If pivotal data hit the mark, ALLK shares could be storming back from late last year's dramatic fall. Now what? Is ALLK stock worth the risk? This small cap is at a high-risk, high-reward play. The share price could quadruple with the value stage of phase 3 results. So that's that stage. I'll go to the website, check this out, but I'm gonna try to go on to the other pipeline where you go into the comments here, and I'm just gonna go into all of their all of their trials there, what's in clinical trials and things like that here, all their targets there. What do you got on the twits?
How about this take from Toffer Nelson? He says ALLK bullish. He's a plus member on StockTwits, and he says, regarding the self-registration, it's very rational for ALLK to register a shelf, which is pre-registered offering, prior to September's news. They are not required to exercise the full amount. They can draw down whatever they'll need. Make no mistake, whether good news or bad news, they'll need to raise some money to continue operating. This expected. However, BIOS with good phase 2 or 3 data that raise money after a pop will tend to give back very little gains because of high institutional ownership. Look at PLRX as one recent example.
And this is why we should cover more of these instead of the cheap seats, because like I said, if you're not playing some of these and waiting out the news, these are the safer plays. For me, I'm not saying to go to this company. I'm saying that I geared myself recently and years back to the biopharmas, starting when I started to see this movement. When I started talking, some of you guys out there thought I was a conspiracy theorist, saying, "Oh, this is you guys were like, oh yeah, nothing's going to happen with the economy. This is the great economy ever since
Sliced
whatever."
bread or
Yeah, sliced
something.
bread. I don't follow the mainstream alphabet channels out there. I go what I see, and I see the money spending, the printing, the laziness, and all the other stuff. And that's why I say with this company, you have what it's right here in front of you on the screen right here. You have the studies that they're going to do. Going down the line, you can go and look at all the press releases they have for every single study. I'm not going to go over it. It's all scientific, but you could do the reading yourself and do the homework. If you don't like this company, go to another one that's not doesn't have to be trending. Just go to try to find it on the cheap and wait till it hits. I tell this story all the time, Kage. You've probably heard me tell it before a million times. I did have Neurovax. I shorted it. I made some, I'll disclose it on my chart or whatever, but I made some dough on it. Should I have held it and not shorted it? Yes, because I could have made a lot more money instead of stupid day trading it and farting around with it. It would be a lot better choice. So you find your buy point at a low end, and then you jump in and wait till the next news comes out. So you get it on the cheap, and then you sell it at the high. So what else do you got on the twits for this? What do we have? Any other people posting any news? I can look on the Google.
I don't know if there's any news about this one.
What are some more comments?
How about this one from Lab Psycho? He says, ALLK. There is a reason they are moving into their very high-end, fancy, and money research building. See pic.
Mm-hmm.
Google the map and see all the other high-end companies surrounding ALK. Don't know if they are completely moved in yet. 825 Industrial Road, San Carlos, California. Anybody able to bike ride past and look at the employees' faces as they walk out of the building? High stepping it. News on the way.
Yeah, next month there's going to be bigger news with this when they have
and
their
next. The picture of the building is actually kind of nice. It's actually kind of modern. Very much into the whole green glass kind of feature where it's not necessarily one huge rectangle, but like series of overlapping ones. So fancy.
And these are different from some of the subs. They're when they're above $2, $3, and $4, they're my type of stocks. I don't really like to play the subs at all because, I mean, some people, that's your game, whatever. It's not my game. But when it's trending in the news like this and we're talking about it, obviously it's not a time to get in and jump in. If you're doing that, that's your game. Your risk could be, whatever your risk is. But whenever you find a part to look at, just don't miss out with some of these biopharmas there when we're talking about them. Put them on your watch list or do whatever there. Investors Observer's got their normal stuff on here. It says there's tons of numbers and ratios. Can remember. Let's see. They got their stupid thing. What about ALLK stock today? It just gave the numbers, and you can go to the full report and buy it. There's nothing really that we need to know about. Do you got anything else on this one before we go on to the next one there, Kage?
Actually, yes. There's a comment from Critical. He used to be called Vertical, and he always gives his receipts, so we like his comments. He says, ALLK, what a squeeze, guys. Went parabolic into the $6.30 level to the tick. Sold off afterward, but keep an eye on it the next days. Ran plus 15.2% after we named it. And he's got his little card and chart in the comments.
Sorry, I got the next one here. So, and what else do you got on there?
Let's see. How about this one from Golden Augusta? He says, ALK. Reviewing the 30-minute chart, the script delivered 14.14 profit factor with a profitability of 82.35%. This was executed over 17 trades with a net profit of $2,760 and drawdown of 180. So he's got his little thing for his day trading in the comments for the NASDAQ on this stock.
Yeah, and Kage, we definitely are going to have to start covering more biopharmas, because apparently that it makes me feel more upbeat with them trading in the long run because of the news breaks and some of the exciting things that a lot of them have going on as far as for helping people out with some of the disabilities and diseases they have. And like I said, even if they don't come up with cures or whatever for the diseases they have, at least you're giving to science and things like that to help, help people out and things like that. So some of you might not like that kind of thing, but you're helping try to research at least. So the next stock I have here is GRNQ, Green Pro Capital Corporation. Last tick was $2.34. Going to the chart, well, we're not going to go back to November 2021 because a different time, different place. We're seeing some resistance come up on this Kage right now. It's Green Pro Capital Corporation. Going into after hours, well, you know how after hours goes. Everything's other down because the night traders get to play. Looks like going into what would you say they do here? They engage in the provision of business solution services to small and medium-sized enterprises. It operates the service business and real estate business segments. The service business segment offers advisory of business solution services. The real estate business segment trades or leases commercial real estate properties in Hong Kong and Malaysia. The company was founded by Chong Quang Lee, July 19, 2013, and is headquartered in Hong Kong, People's Republic of Hong Kong. It is no longer free Hong Kong anymore. So going into stock twits, because that's where the real traders are at, Kage, what do you have on the twits?
How about this one from Oxford's? He says bullish, GRNQ. Glad I bought Inlay 500 at $2.70 in case I FOMO'd. I can average down easily. Hopefully it will go higher.
I'm on the website because I got no news on this. There's nothing on the Google machine on this stock. Going into the homepage, integrative service solutions for business growth professionally. They assist emerging growth businesses for net worth value individuals to capitalize value and max wealth globally. Now, you know how I feel about some of the stocks in the CCP. Hong Kong is
now part of it, yeah.
Is part of it. So, my take on any of those stocks is I stay away because they are highly manipulated. And you play, not saying it's not good. That's your call to say what you want to do. But like I said, I don't carry the pom-poms for any stock or anything. Not going to carry the cooler for anything, but I'll go with you and give it a fair shake and look at it. Looks like going in here, let's go on there. We got a location because we don't have any news, so we're just going on the website, and then we'll go into stock twits, Kage. We'll cover your comments, and then I'll look for some news articles while you're covering some comments. But locations, looks like they have a Kuala Lumpur headquarters. Then they're in Hong Kong. Then they're in Shenzhen. And then they're in Bangkok. Let's see. They got the SEC filings, annual meeting, court, whistleblower form. Let's go to services here. Website, not bad. It's not like an instant page or anything. It's not my favorite. What it looks, that's not bad. They work worldwide, professional, talented corporation advisors with extensive experience in advising leading corporations with successful cases that have proven resulting in solving complex corporate issues, and are determined to best advise and support all aspects of the client's requirements to maximize corporate value. The public's corporate advisory services entail the following areas of expertise: go public, international advisory, international corporate restructuring, corporate structure planning, and advisory of business expansion. Going on to the twits, what do you got, my friend?
How about this one from Credit Call? He is on this stock too. He's brought his receipts, and he says GRNQ, solid trend intraday, continued to 3.35 after hours. On watch for pre-market for sure. 3 28.81 next resistance. Ran plus 72.33% after we named it, and he's got his little thing for the stock in the comments.
Did he say why? Did he say why we're trending? Because there's no news. Why is it trending, and why are we switching?
He said solid trend intraday.
Okay. Okay.
Yeah.
It looks like they use their expertise to specialize or implementing protection strategies to preserve your wealth left by insolvency. They do private and family trusts, private investment company setup, foundation of family office setup, wealth planning and management advisory, and escrow custodial services. Incubation. They utilize, accelerate, incubate company growth and mature skills, and successfully incubated 50 companies worldwide to their ADAQ programs. The next generation of financial information platforms, and facilitates accelerated pre-listed high-growth emerging companies to connect with access to potential investors for synergistic companies. Kage, with the news you know about as far as some of China's issues they have with financial things, with possibly collapsing next year, maybe with some of the economic issues, does that concern you with the rumors of that out there with this stock?
It would concern me. As
just
far
throwing
as
it out there, guys. Just throwing it out there.
As far as
Speculative.
getting into this stock like now in particular, with where it is right now, I would be very hesitant to get in on it.
Mm-hmm.
I would be very hesitant. The temptation is there, but don't let yourself get led over a cliff by a carrot in front of your face.
Yeah, we're not saying that we're against it. We're not saying you do what you want to do. We're just giving our take of that the risk is out there, and there is this talk of financial issues coming up. I mean, there's a reason why the tanks are out in front of the banks in China. So just to let you know, if you haven't heard of that. So not saying we're against it. We're just throwing all the angles and all the aspects out on this. So you obviously know they do accounting intelligence, business intelligence, credibility intelligence, debt financing, equity finance intelligence, and financial intelligence. So we threw out everything they have. You have specters of this. We don't know how involved they are with any of the other country stuff and things, but we're just throwing all this out there that all these things could come down, but if one goes down, they all go down. So that's what we have.
Yeah, a little house of cards.
Mm-hmm. So what else do you got on the twits before we end this show?
How about this one from Shivers? He says GRNQ. Oh man, only 0.09 away from my grossly early sell. Do I want to bet on a 4 a.m. pop or not? That is the question.
Interesting. What else do you got?
How about this take from... how about this one from Chinops? He says, GRNO. Huge potential here. 3 million float. This actually goes as high as we squeeze it. Those that FMO'd into ATG, this is an actual stock and not Chinese PND. 3.2 p.m. tomorrow.
So there you have it. You have another good take on the board. So you have everything out there. We threw it out there. He had his take, and he said that there's nothing involved with this. So you have all the information out there to make an informed decision now of where you're going to go, and you have all the tea leaves you can read. Do you have anything to add on this? I think you read some great takes there, Kage, and I think we covered.
I don't really think I have anything else for this stock. It's just one of those things where it's tempting for sure, but you should be wary about it. Yeah, that's all I'm gonna say.
Okay, well, we gave the information, and until tomorrow, same crappy time, same crappy channel. We'll be just don't make it a dog show. And good night now.
Good night, people.